What's going on, everybody? It's Sasha, the market expert here in Charlotte. Welcome back to the channel. Today, I want to talk to you guys about the two most popular types of loans, which are FHA and conventional. So loans can be extremely confusing and boring to talk about, to be honest. So I'm going to break it down to you in the most simplest terms. That way you can make the decision on which one works best for you. If you haven't already done so, hit that subscribe button and let's get started. Let's start with FHA loans. FHA stands for Federal Housing Administration, and FHA loans are geared more towards people with lower to moderate income and a lower credit score. So the minimum credit score you're allowed to have to qualify for FHA is a credit score of 500. But here's the catch. If your credit score is 580 or below, they require you to put a 10% down payment on a house. If you have 580 or higher, it goes down to 3.5%. In regards to the loan terms for FHA, you can only pick between a 15-year loan and a 30-year loan. So FHA has a loan limit and it varies by county. So right now in Mecklenburg County, the loan limit is up to $331,000. But like I said, it varies by your county. What I'll do is I'm going to put a website down in the description below, and click on that website, enter your county's information, and it will give you the loan limits for the FHA qualification. So one of the best things about the FHA loan is the interest. So usually FHA loans have a lower interest rate than conventional loans because they're backed by the government. And another reason why FHA loans are so popular is because when you use an FHA loan, sometimes you can qualify for a down payment assistance program or a government program. What these government programs do is exactly what it implies. It helps you with your down payment. So in some cases, if you qualify, FHA loans, they'll help you pay the entire amount of your down payment when you're buying a home. So we've talked about some great points, and I'm sure you can definitely see why FHA loans are so appealing. Now let's talk about a downfall that they have. So with an FHA loan, they'll usually charge you a mortgage insurance premium that you have to pay upfront at closing, and that's going to be 1.75% of the loan amount. Now, another bad thing is with this mortgage insurance premium, they still charge you on an annual basis and it's divided up monthly into your payment. And unfortunately, that amount stays on your mortgage payment for the entire life of the loan. Now let's talk about conventional loans. So to get a conventional loan, you need a minimum credit score of 620, and you're most likely going to be looking at a 3% down payment. And the loan terms are a lot more flexible than FHA. You can get a 10, 15, 20, or 30-year loan term using the conventional loan. Now, conventional loans have a slightly higher interest rate than FHA loans, and it depends a lot more on credit. For example, if there's two people that are getting a conventional loan, one person has a 640 credit score, the other has a 750. The person with the 640 credit score is going to end up paying more in interest than the person with the 750. This is why sometimes you'll see somebody that has a 680 credit score, but the lender will recommend that they go with an FHA because in the long term that's going to be what's best for them because of the interest rate. If you decide to go with a conventional loan and you put down less than 20%, they'll charge you what's called PMI. It stands for private mortgage insurance, which is really similar to the mortgage insurance premium that the FHA loan charges you. But the only thing different is with a conventional loan, they won't charge you anything up front like they do with the FHA loan. And when you build up at least 20% equity in the property, you can call and you can see if you can get the PMI taken off so it's not on your monthly bill like it is for the FHA loan for the rest of your loan. So we've covered the main points of these loans, and I really hope I didn't confuse you too much. Sometimes it could be like drinking water out of a fire hose, but the main point is going to be this. Make sure you find a good lender. If you're in the Charlotte area, reach out to me. I can get you connected with some great lenders. And honestly, if you're with a tried and true lender, they're going to tell you exactly what's best for you and your situation. So listen, guys, I hope you've enjoyed this video. If you haven't, subscribe, please. And I got a lot more videos coming up soon. Call me, text me, email me if there's absolutely anything you need. As you can see, the sun is shining over here. It's getting kind of dark, and Luna just joined me. But the fiance is about to be home, so I'll see you guys on the next one. Bye.